Warm welcome to you, my dear children. We meet again with the next chapter of Unit 12. Next chapter means these are the same errors that we are continuing from the point we stopped in the last video. Yeah, the last video we stopped at accounting errors which do not affect the trial balance. Yeah, here we go. We have one more here, errors which do not affect the trial balance. All right, one more error which do not affect the trial balance, which means even though these errors occur in the accounting records, even though these errors are already there, the trial balance will still balance. Trial balance will still balance. It will balance, right? That means the debit column will be equal to the credit column total, right? So these type of errors should be corrected immediately, wherever, when and where, doesn't matter. Soon as we find these type of errors, we should correct them immediately, okay? But anyhow, in the exam paper, children, you will get errors given to you. You don't have to find errors or trace out errors. Errors will be given to you. You just got to come up with the rectifying double entry. You got to come up with the rectifying double entry. Rectifying double entry means how to correct these errors. You need to put a double entry, okay, in the general journal. That's all you got to do. These are not so complex, hard and fast things. Okay. This error, let's go through this one. Recording the same transaction twice in the accounting books. The same transaction is recorded twice in the accounting books. Same transaction is recorded twice in the accounting books. Okay. Now, put your thinking caps on. Put your thinking caps on. Thinking caps. Now, right. What you should think is, if the same transaction is recorded twice, which means one account is debited and the other account is credited once, and again that account is debited and the same account is credited again. So what should you do to correct this error? Well, it's an error. Of course it's an error. Of course it's an error, because it's doubled. Now one value is doubled in the relevant accounts. What should you do? Now you tell me. You reverse the double entry. Reverse it. Reverse it. Yeah, that's what it says. Sometimes a transaction might have been recorded twice in the prime entry books and accordingly posted to the ledger accounts twice. This error can be corrected by reversing. Reversing. Got it? The additional entry. The second entry which you made, the duplicate entry. Let's take an example. Let's take an example. Okay. Let's take the same example which is given here. Purchase invoice of 10,000 credit has been entered twice in the books. A purchase invoice of 10,000 on credit basis has been entered twice in the books. That's it. It has been entered twice. That's it. All right. That means once once it has been entered in the relevant books. That means relevant accounts. Okay. Once it has been entered in the relevant accounts. What are the relevant accounts? You tell me. Tell me. What are the relevant accounts to record this transaction? Tell me the relevant accounts. Purchase invoice of 10,000. Purchase invoice of 10,000 on credit basis, which means we have purchased goods. Purchased goods, not paid cash. Okay, cash is not paid. Then purchases increase and creditors also increase. So the two accounts are purchase account and creditors account. These are the two accounts, the relevant accounts. Purchase account and creditors account. Purchase account should be debited, creditors account should be credited, 10,000. So I'll debit 10 here, credit 10 here. That is the double entry. Okay, that is the double entry. My drawings aren't they clear to you? It should be purchases. Okay. Purchases. Okay. This is the double entry. This is the actual correct double entry which has been recorded, which has been entered. Okay, to record this transaction. Purchase invoice of 10,000 on credit basis. But the problem is it has been entered twice. Yeah, that is the problem. You have to identify the problem. Problem is it has been entered twice. That means again it has been entered 10 and 10. Again, for the second time. This entry is wrong. It should be removed. So what should you do? This entry is wrong. This is the wrong entry. So I'm going to mark it with what? I'm going to circle it. Okay, this is the wrong entry. Okay, I will circle it. That is the wrong entry because this for the second time, same value has been entered. Same value has been entered for the second time. Right? So what to do to correct this? What to do? You take an eraser, go to your accounts, erase it. Take an eraser, erase it. This one also, erase it. Done. It's done. Now you have the correct entries. Purchases account debit, creditors account credit, 10,000 is debited and credited. Erased. No, we can't do that. Who's saying? Are you saying that we can't erase? What? It's not allowed to erase entries from accounts. Not allowed. Fine. Tipex. Correction fluid. Put some correction fluid and erase the 10 from the creditors account and from the purchase account. Done. Can't do it. It's not allowed. That's right, children. You cannot erase or you cannot cover it with correction fluid, using correction fluid or whatever erasing material. You cannot remove an entry when once it is entered in an account. You can't erase it. You can't say, this is a duplicate entry. The same entry has been put twice. So this entry should be removed. That's why I'm going to erase it. And you erase it. Can't do it. You can't do it. Okay. If one entry is recorded and the same entry is again recorded, can't help. There's nothing to do. You have to remove the duplicate entry with another double entry. And that double entry is what? Reverse double. It is a reverse double entry. If the purchases account debit side, we have a 10,000, which is not necessary. If in the purchases account debit side, if we have a 10,000, which should be removed, what do? You credit purchases and this 10 will be cut off to this 10. And if in the creditors account there is a 10,000 which is not necessary, the credit side. If there is a 10,000 in the creditors account which should be removed in the credit side, you debit that 10,000 and it will be cut off. That is the entry. So first entry, second entry, the double entry is already decided. Creditors account should be debit. Purchases account should be credit. Okay, that's it. That's it. Creditors account should be debit. Purchases account should be credit with 10. That's what they have given here. That's what they have given here, see? All right. Creditors account should be debit 10,000. Purchases account should be credit 10,000. That's it. Done. That is how you correct duplication errors, by reversing the correct double entry. You reverse. Okay. Right. So this is the final error which we have in the category, in the first category, which are the errors which do not affect the trial balance. Okay. This is the final error. Only 3. No, there's another one. Okay. There you go. There's another one. So this one, we are already done with this. Recording same transaction twice, and we know what to do if we get an error, a duplication error. These are called duplication errors. Duplication errors. We know what to do now, okay? We know, right? You know. Yes, you know. Reverse the double entry. Then we have the next error. Recording the value of a transaction in an incorrect account instead of the relevant account. All right. Recording of the value of a transaction in an incorrect account. Incorrect account. Incorrect account. Wrong account. Incorrect. Wrong. recording the transaction value in a wrong account. Wrong account. Let's see. There are occasions when the value of a transaction is recorded in an incorrect account instead of the relevant correct account. Yeah, problematic, things which can mislead our stakeholders. When our owners of the business, when the managers of the business, when they refer to our accounts and they see entries in the wrong account, and they can be misled. Yeah, they will take the wrong decision. Yeah, that can happen. So immediately we have to correct. There are occasions when the value of a transaction is recorded in an incorrect account instead of the relevant account. However, there is no impact on the agreement of the trial balance due to this error because the same value had been recorded in both debit and credit entries. See, example. Office equipments that had been purchased for the business use for rupees 200,000 is debited in the purchases account. What is that? What is that error? Is that an error? I don't know. It seems correct to me. What do you think? Office equipment that had been purchased. Yeah, okay. We have purchased office equipments. Office equipments means photocopiers and fax machines and computers and computer tables and chairs and office equipment. We have purchased for the business use. Okay, not to resell. We are buying office furniture here for our office, let's say, or for our showroom, to use in the business. We need office equipment. That's why we have purchased for the business use. Okay, for 200,000, it's a considerable amount. Is debited in the purchase. It is debited in the purchases account. So what? It's a purchase. It's a purchase. It is a purchase. See? Office equipments purchased. Then it is debited in the purchases account. Debited in the purchases account. Yeah, right. Right. So what's wrong with it? It's wrong. It's wrong. You don't debit, you don't enter non-current assets in the purchases account. No, you don't. Non-current assets, if you purchase for the use of the business, okay, for the business use, you do not enter in the purchases account. You only enter goods purchased for reselling in the purchases account. Don't look at me like this is the first time I'm telling you this. I have told you this enough times. Enough. More than maybe 10 times I have told you this. I have. Don't say that I haven't. I have told you that purchases account is for goods. Purchasing of goods only. Purchasing of trading goods. If you purchase trading goods, which means the goods that you purchase for the shop or the goods that you purchase for the business in order to resell. Okay, you should keep that in. Bear that in mind. That's it. So this is a wrong entry, an error. What is the error? In the purchaser's account, in the purchaser's account, in the purchaser's account, okay? $200,000 is debited, see? 200,000 is debited, is debited. Which should be what? Removed. Which should be removed. It should be removed. There's no doubt about that. It should be removed. Okay? It should be removed. But where is the other entry? Okay, we know how to remove. Okay, right. We'll do it here. Let's do it. Let's do it. I'll do it here. Huh? This is the purchaser's account. Right? The purchase account. Okay, this is the purchase account. And it has been debited in the purchase account. What? 200,000. This 200,000 is debited in the purchase account. 200,000. All right. And this is wrong. It's wrong. It should not be here. Should not be debited to the purchaser's account. That's what I'm saying. All right. Should not be debited to the purchase account. So we can't erase it. We can't cut it off. We can't use correction fluid and erasers. Right? We can't do anything. What should we do? We should credit this 200,000. Then it will be cut off. It will be removed automatically, this 200,000, when we credit. Okay? So this 200,000 will be cut off to this 200,000. Then it is removed. That is what we are going to do to correct this error and to take out this unnecessary 200,000, which is in the purchases account. We credit the purchase account. But there should be another entry now. There should be the other entry. Double entries should be there now. Where is the other? What is the other entry? You tell me. You tell me. What is the other entry? Children, this is somewhere, some children, this is a place, this is a point where some children go wrong. Okay. What they say is office equipment that had been purchased, okay, for the business use, is entered in the purchaser's account. We know that purchaser's account is always debited. And we credited this 200,000 to cancel off this wrong entry. And we cancel it off. That is done. That is done. Right? That is done. We cancel it off. Okay? Okay. Yeah. But in the error, children, they don't say that the other entry is in any way is wrong. The double entry of this transaction, they don't mention anything about it. Yeah. Where have they mentioned about the double entry? When office equipments are purchased for the business use, okay, the 200,000 is debited in the purchaser's account and it should be credited somewhere. Somewhere. Isn't it? So if it is debited in the purchaser's account, children, I'll move to this side so it's clear to you. If it is debited in the purchaser's account, okay, if this is debited in the purchaser's account, it should be credited to the cash account if the office equipments are purchased for cash. So debit purchases, credit cash. You get what I'm saying, right? Yeah. So they don't say anything about this cash credit, the credit entry. They don't say anything about the credit entry. This entry, no. There's nothing. That means we have to assume that there is nothing wrong with this credit entry. Credit entry is correct. We have to assume. Yeah. Then what we do is we imagine, we think in this manner. Debit entry is wrong, which is recorded, which has gone to this account. It is wrong. This debit entry is wrong. Credit entry is okay. The credit entry is okay. Okay? Okay? Got it? Credit entry is okay. So this wrong entry, now we corrected it. We corrected it by crediting purchases account. Yeah? A cash credit or bank account credit, the credit entry, we can't touch. We can't touch. Then how do we come up with a double entry when we enter purchases account credit side 200,000? One entry is done. This is the entry, first entry. Let's take that as the first entry. This is the first entry, and one entry is done. Why the second entry? This 200,000 should be debited somewhere. Huh? Because you credited the purchases account to cancel off this one. Now now one entry is already made. Purchases account credit. You have to think which account should be debited now. Think. Children, if this office equipments are not recorded in the purchases account, now it is cancelled off. Now it is cancelled off. But there should be a separate entry to record office equipment. The new office equipments or the increase in office equipments. So then we must have a separate account or a separate entry called office equipments. Office equipments. And we should debit not 10, I'm sorry, 200,000. 200,000 to that. Why? There should be an entry to record the office equipments purchased, because we cancelled off the purchases account. This entry from the purchases account, now purchases account was credited, right? And there's no entry to record this new office equipments which we bought for the business. That is why we debit a new account called office equipments account. We put it to the debit side of office equipments account. That is the double entry. Okay. Now, every single error should be corrected with a double entry. Double entry. You should write a double entry in the general journal. Okay. Then this should be the first entry, my dear students. This should be the first entry, because the debit entry is always the first entry. Credit entry is always the second entry when you write in the general journal. That means, voila. Okay. Error is here. corrected with our counting knowledge by drawing small accounts. Corrected. Now let's go and check the general journal. There you go. Correct, right? Yep, it's correct. It's correct. This is the double entry, see? That is the double entry. Office equipments debit 200,000. Purchases account credit 200,000. And you write the narration. It's a big narration. Let's read it out. Correction of recording 200,000 worth of office equipment that was purchased for business use, which was erroneously recorded in the purchases account. Wrong narration. Long narration. Okay. Well, you can make it shorter. But just check the double entry. This is the first entry. I have marked with numbers. This is the first entry. This is the second entry. So office equipments debit 200,000. Purchases account credit 200,000. Office equipments debit 200,000. It's correct. Purchases account credit 200,000. That is also correct. That's how you do. You should be careful when you correct these type of errors. You should be careful. Sometimes children credit the cash book or the bank book, thinking that office equipments purchased. No, so we have spent cash. We have spent money. No, that means money going out. Cash book should be credited. So we must credit the cash book. People think that way. Students. Okay. So that is it. We have an activity. Shall we? All right. Activity. Interesting one. They have given us as a quote or a situation. Let's read it. An apprentice bookkeeper. New word. Do you know what is apprentice? Trainee. Apprentice means trainee. 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 He is under training still, a new one. Okay. Apprentice bookkeeper has prepared a trial balance on 31st December 2021. And says that it is not necessary to check again the accounts as both debit and credit columns got balanced. He is saying, this guy is a trainee bookkeeper, but he's saying, my trial balance balanced. Who's gonna tell me that there are errors in my books, in my accounts? Nobody can tell that there are errors. My trial balance balanced at once. See, it's all correct, 100%. He's saying, is that correct? Do you agree? This guy is saying, no need to check. That it is not necessary to check again the accounts as both balances of debit and credit columns of the trial balance agree. 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 Yeah. As well as the final accounts can be prepared. he's saying the final accounts, that means the financial statements. I gave you the financial statements, and what financial statements are. It was a very brief, very simple explanation though, but I gave you an idea about financial statements. The very at the very bottom of the bookkeeping process, source documents, then source documents are recorded, source documents are used, and transactions are recorded in the prime entry books. Then from prime entry books, ledger accounts are prepared, and then ledger accounts are balanced, and trial balance is prepared. From the trial balance, if the trial balance balances, the trial balance balances, the financial statements or final reports, final accounts are prepared. He's saying now my trial balance has balanced, I have done it perfectly, no errors, so no need to check anything again. Me, I have finished it at once. The accountants, the boss can prepare the final accounts using my accounting records because there are no errors. He's saying, do you agree? Do you agree now? You have to think. Comment on the above statement. Comment. Think well. Think very well. He's an apprentice bookkeeper, trainee. And he's the one who has prepared all the accounts. But he has somehow balanced the debit and credit columns of the trial balance. That means he's saying no need to recheck his accounts and his books of accounts that he prepared, because everything is perfect, 100%. Do you agree? No. We can't agree. No. No exclamation mark. Cannot agree. Cannot agree. Why? Even though the trial balance is balanced, there can be what? Errors. You already know this. If you haven't watched the previous video, go and watch the previous video. I explained why that there can be, how there can be errors. What errors can be there? There are two types of errors. Errors which affect the trial balance, so the trial balance is not balancing. But there are errors which do not affect the trial balance. So even though these errors are in the accounts, trial balance still balances. That's why we can't agree. We say no. Comment on the above statement. You have to comment. Cannot agree, and we have to comment. How can we comment? Even though the trial balance balances, that does not ensure, 100% accuracy. 100% accuracy of the accounting records. That does not ensure 100% accuracy of accounting records. Because why? Because although TB agrees, trial balance agrees, there still can be errors. There still can be errors. If you want, put another exclamation mark. There still can be errors. Done. Even though the trial balances, that does not ensure 100% accuracy of the accounting records, because although trial balance agrees, there still can be errors. Yeah. Okay. So here we commented on this statement of this guy. Commented on his statement. No hard feelings, all right. We don't have anything personal against any bookkeepers. But if you say that since your trial balance has balanced, if you say that no need to check my accounts, all everything is 100% correct. If you say that, we must not agree. We cannot agree. Okay. Right. Shall we? Moving on. Even though the totals of the trial balance prepared by a business agreed, the following errors were identified subsequently. All right. Activity 2. There has been a trial balance in the business 31st December 2021. Okay. 2021. So the trial balance has agreed. That means trial balance has been balanced. But the following errors were identified subsequently. Subsequently means afterwards. Some errors have been identified. First one. Purchase invoice of 20,000 has been completely omitted from the books of accounts. Omission. You know how to correct that. Easy. Complete omission. Which means this purchase invoice, credit purchase 20,000 has not been recorded at all. It is not recorded, and the invoice, I don't know where has it gone. The transaction is completely neglected, not recorded anywhere. That's an easy error. That is the first type of error that we discussed. First type of error which we took. Here you go. A complete omission of a transaction. First type of errors. Errors that do not affect the trial balance. Out of those, this is the first. Now we have that type of error here which should be corrected. Can we do that? Can you? Who can? Who can do this? Do this. I'm not going to do this. You have to do this. You. Yes, Puda. Yes. The double entry, the rectifying double entry to correct this. Yes? Okay. If it is a credit purchase, the double entry should be purchases account debit and creditors account credit. So we just have to record that. Purchases debit, creditors credit. Is that your rectifying entry? Purchases account debit, creditors account credit. That's it. So easy. That's it. Well, really? That's how you correct this. Yes, of course. That's how you correct it. So easy. Because it's a complete omission, no entry, no double entry has been recorded. You only have to record the correct double entry. Simple stuff, right? Okay. We'll draw a general journal and we'll put the double entries. We'll do this. We'll draw the general journal and we'll finish it quickly. Let's go and take a blank slide and draw the general journal. General journal. Here you go. No. Orange. We have to use black. Here you go. The general journal. Date column. Voucher number, description column, debit column, credit column. There you go. That's it. Okay. This is the general journal, children. General journal. Date, voucher number, details, debit, credit. It's a simple format of the general journal. We put the first error, we'll put number 1 here, and let's go and check what to do. Purchase invoice of 20,000 has been completely omitted from the books of accounts. We know what to do. We have to record the double entry in the general journal. Purchase invoice means it's a credit purchase. Credit purchase of 20,000. Purchasers account should be debited. Can't you identify my handwriting? Purchasers account debit 20. Okay. Creditors account should be credit 20. Write the narration. Don't forget the narration because narration is important. What is the narration? Go back to the error and read the error. You can even write the error itself as the narration. What I'm going to do is I'm going to write the error, the necessary part. Corrected the error of purchase invoice 20,000 being completely omitted. That's what I'm going to write. Corrected the error of purchase invoice 20,000 being omitted. There. Narration done. In the previous video, children, we talked about narrations. I'm not going to tell you anything about narrations. Just write the narration. If you want, you write the narration. If you don't want, you don't write the narration. No. You must write the narration. Here you go, narration. Okay. Narration. Now, second error, we have to go and check. Let's put number 2 and divide with a line. Okay, that's easy and clear. Let's go and check the second error. Computer board for office use to the cost of 40,000. Can you see this? A computer bought for office use at rupees 40,000 has been debited to the purchaser's account. This is the type of error that we discussed previously, recording the correct amount in the wrong account. If a computer is bought for office use, you cannot enter in the purchaser's account. No. If you purchase a computer, if you purchase furniture, if you purchase office equipment, purchase a building, purchase a motor vehicle, those are non-current assets. Non-current assets. No, you cannot enter non-current asset purchases in the purchaser's account. No. No. In the purchaser's account, you don't enter non-current asset purchases. What purchases do you enter in the purchaser's account? Yeah, I can see that you are trying. Yeah, tell me. Yes, very good. Purchasing of goods, trading goods. If you purchase trading goods only, you enter in the purchaser's account. Otherwise, you don't enter these non-current assets in the purchaser's account. No! You have to remove that. You have to remove that. Remove what? You have to remove this 40,000 from the purchaser's account. So purchaser's account is an account which is always debited. If 40,000 is debited, to remove it, credit purchaser's account. And debit where? You have to record the new non-current asset in a new account. That is the computer, office computer account. All right. Do you want me to draw accounts and show you this explanation? No, right? We did this same type of a transaction, same type of an error just few minutes ago. Yeah. To cancel off the purchaser's account debit entry 40,000, you credit the purchaser's account. Okay, credit the purchaser's account and debit to the office computer account. That's right. Let's take the debit entry first. Office computer debit 40,000. Then purchases account credit 40,000. Narration. What should be the narration? Corrected. You write the narration. Why am I doing everything by myself? You do it. Do it. You do it. Yeah. Corrected the error of yeah, recording office equipment or office computer in the purchase account. That's right. Just look at the error value and you can write the narration. Corrected the error of, you have to write corrected the error of computer purchased for 40,000, recording in the purchase account. That is the error, no? So corrected the error of computer office computer being recorded in purchases account. In purchase account. There you go. Done. Simple things, huh? Yeah, easy peasy, lemon squeezy. Next error. I'm going to do only this error for you, okay? You have to do the next one. Third one. Payment of electricity charges 5,000 has been erroneously debited to the insurance charges. 5,000 electricity charges paid. That means current bill, light bill paid. Electricity charge, that's what we say, right? Light bill kevala. Electricity charges, electricity account has been paid, okay? But erroneously, by mistake, debited in the insurance account. So this is recording the correct amount in the wrong account again. What is the wrong account? Debited in the insurance account. What you must do? You must cancel off the insurance account debit entry because it is wrong. This 5,000 is in the insurance account, debit side. So what you do is credit it. Insurance account, credit. Yeah, that's right. Insurance account, you credit. Debit to the wrong account. It was debited to the wrong account. That's why you credit it. Then the insurance charges account will be corrected because the 5,000 was debited to the wrong account. This is the wrong account, insurance charges account. Because it was debited, you credit it. Credit insurance charges. Okay. Debit to what? The right account, electricity charges account. Got it? Okay. Payment of electricity charges 5,000 has been erroneously debited to the insurance charges account. Let's correct it. Debit to electricity. First, you must write the debit entry. So, electricity account debit 5,000. Then credit to insurance account. Insurance account credit 5,000. Write the narration by yourself. Write the narration. You write the narration. You write it. You write it. Then we are done with the third. Moving on to the fourth. We are moving on to the fourth. Fourth error. Let's see fourth error. Fourth error. Fourth error, this one. Withdrawal of goods worth of 12,000. It's a drawing. See? Withdrawal of goods worth of 12,000 by the owner. By the owner. Yeah. For his own use. Has not been recorded in the books. It's a complete omission. Oh no. These are simple errors, children. Simple. Most simple ones. Withdrawal of goods worth of 12,000 by the owner. Has not been recorded in the books. Complete omission. Omission means not recorded in any book or any account. So we just have to record the double entry. Tell me the double entry for goods drawings. Goods drawings, you tell me how to record this goods drawing. Yeah, goods drawing, withdrawal of goods, 12,000 by the owner. Goods drawing. Yeah. Cash credit? What? No. Cash book does not get involved here. No cash involved. It's a goods drawing. First, the debit entry. Drawings debit, that's right. Drawings account debit, goods credit. No, there is no goods account. There is no goods account. Purchases credit, that's right. Purchases account credit, drawings account debit. That is the double entry. And write it with narration. Narration. Don't forget the narration. And we have done this and finished the double entries or journal entries to correct the above errors. Writing double entries in the general journal is known as writing journal entries or putting journal entries. Okay. So fourth one, drawings debit, 12,000. Cash, no. Somebody is saying cash again. No, purchases. It's a goods drawing, children. So purchases, credit 12,000. Okay. If it is a cash drawing, or if owner took cash out of the business, then if cash is gone, then cash should be credit. Here it's a goods drawing. Goods. Okay. Children, with that we finish errors which do not affect the trial balance. These errors do not affect the trial balance and we know how to correct them now. We know. You know. Yes, you know. Do more activities, do more exercises. Practice makes you perfect. Okay. Happy to be with you, children, and hoping to see you again with errors that affect the trial balance. Errors that affect the trial balance, the next type of errors. Done. Thank you. I hope to see you soon. So do your work, be good, and be happy. See you.